What's going on, everyone? It's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications from when we go live, tap the bell, and links are below to our Discord, along with our Patreon and our free options trading group on Facebook. If you're here right now, say what up. What's going on, Jeff? How you doing? Just getting going here. We had the Dow up 250, S&P's up 32, 30. Dow is up 260 currently. Man, pretty crazy day. A little bit of a delayed day response to Columbus Day yesterday, which the market was open, but bond market was closed. Banks were closed. I think some of the government was closed. I'm doing all right, man. I'm doing all right. If you're here right now, say what up. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Just getting going here. Yo, Charles, what's going on? Yeah, so today was my first day back. I actually took the weekend off. It was my wife and I's anniversary yesterday, so I took off, went out of town, left Friday, Saturday, Sunday, came back late Monday, and now we're here getting back into the groove, Jonathan, with the live streams and the videos. Jonathan got paid, nice. I feel like I put a strangle on Netflix too early. I'm going to get ate up by Theta. Alex, good news for you is earnings is tomorrow, and Theta won't be that much of an impact. So if you think you made a mistake, it won't be as costly as it normally would. It's still going to cost, but it's not going to be as costly as you think it would be without earnings. If earnings wasn't tomorrow, yeah, you're gonna get eaten up. But today for Netflix wasn't pretty choppy day. Same for Apple. I actually my only trade that I did today, and I didn't today I was kind of going real slow. I'll explain to you in a minute, kind of what the title is, what I learned from taking max loss on SPY. My only trade on Apple is I bought the 240 call. Today kind of going slow. Obviously, I'm down on that position. I bought it at, what time did I buy that today? Yeah, 11:21. So I bought it. I bought the dip here. It's just never broke back out, and then it failed. It failed at the at close. The reason why I didn't cut it is because it did stay below 235. Right around where I bought it. So felt it was a pretty safe swing position. It was my only trade today. I didn't actually have anything else on in the account. Clean decks. Yo, Manny, what's going on? I cleaned my account out on Friday. I sold everything off, and obviously I took max loss in SPY as my video title suggests here. So I'll get to that in a second here. Kind of a crazy day for it to be delayed. And today was the first day, big day for earnings today. Only two companies missed earnings today, and that was Wells Fargo and Goldman Sachs. So, here we are. But to go into my trade on Friday, so I had SPY, I had the 291 puts, and for the last couple of weeks, I've been kind of struggling with the news and the politics and everything surrounding it. I was actually really looking forward to earnings season because it takes the headlines off of politics, takes the headlines off the trade war, and that way we can start focusing on the companies, whether they're growing or not growing or whatever the case is, making money, losing money. That's where I like to trade. I don't really like to trade headlines versus, is a deal going to happen, deal not going to happen. But my first mistake on Friday, so we'll go back to Friday. We'll go back to Thursday and Friday. My first mistake is I bought the 291 put, and my first mistake on Friday was that it was potentially actually gambling that position because I excuse me, I bought them both for $1.05, and I let them go into expiration Friday knowing they could be worthless. So that's already gambling already. So, big mistake was that, because of the reaction the couple nights ago when it went from SPY went from 291 down to 287. I thought, it could gap down without a trade deal. I thought for sure there wasn't going to be a trade deal, but that kind of shows you that anything can happen in the market. Even though there wasn't a deal technically signed, Trump was pumping that they made a deal. China wants to have more talks before they actually sign whatever phase one is. So, the first big mistake that I made was going into expiration Friday as a gamble. I should have put on a strangle or a little bit more of a safer trade. Instead, I went into puts naked on expiration Friday, which is like the most high risk thing that you can do on news that potentially might not happen. So if you think about that from like a trading standpoint, like why did I do that? Why did I do that? And sometimes as a trader, you don't really know why you do things until after you do things, like, wow, I made a mistake there. Sometimes it's emotional, sometimes it's out of aggression, sometimes you just get so involved in the trade, like you start trading probably too much and start over trading. You start to go from one trading to the next trading to the next trade. When the market right now is kind of telling you to breathe, sure, we had some runners today like Microsoft, Roku, Nvidia, Amazon, and Google. We had some runners today. But if you look at the charts, they're not. The volatility is down today. We're back down, and the VIX is back down to the 13s. /VX futures is down to 13 as well. So when VIX is coming down, you can't keep going into trade, coming out of trade, going into trade, coming out of trade. You actually have to go a lot slower. When VIX is coming down and we're down in the teens and going down into 12, 11, hopefully not 10, but or single digits again. You have to realign. You have to change your strategy. We were doing well with going in and out of trades when the market is running hot, but when the market isn't running so hot, you have to scale back. You're gonna make good trades still, but you're gonna have to scale back how many positions and how quickly you enter them. Before, when VIX is 18, 19, 20, 23, 24, 25, somewhere up in there, you can get in and out of positions relatively fast, come out with 20, 30%, and keep doing that. But when VIX is 15, 13, 14 or below, you really need to take your time, plan your trades, and enter at a good time because, like today, Apple. I bought the 240 calls. I thought we could revisit, but because the volatility down, this was basically flat. After I bought the position, it basically stayed the same price the rest of the day. We missed the morning action. I thought it was starting to stabilize, it's going to bounce back up. Potentially, my idea was it's going to revisit 237, 237.50. I would cash out, but since volatility is down, that didn't happen. So now I'm holding into tomorrow. But in terms of the trade, I thought that. Yeah, Rob, I agree. Everyone makes mistakes, but he needs to repeat them. As a trader, you have to constantly reflect why you do certain things. And, for me, I definitely start thinking when I have 2 red days in a row, I know that it's not the market, it's me. It's never the market that made you lose money. It's your fault that you lost money. It's your fault that you went into a trade that was maybe too risky. It's your fault that you went into a trade that could have had a 50-50 outcome. The probability wasn't high of it happening. Or you could have just entered a trade blindly and not done your own due diligence, And that's one of the things that I'm trying to get away from is the traders here at Us versus Herd. I want everyone to come up as independent and not focus on everybody's trades. The reason why I do post my trades in the Discord is for kind of accountability reasons, but I don't want people to copy them. I don't want people to go into those trades because, like for me, for instance, I'm only human. I could be wrong too. If you bought those SPY puts too, you'd be at max loss too. And, some people, look at my trades and you could say, hey, why did Nick do that position? And, honestly, it was a stupid position to buy those SPY puts on Thursday going into expiration Friday with a potential trade deal, no trade deal, and the market was pumping. That was for playing it safe. Normally I try to play it pretty safe, and that was probably the dumbest thing I've done in a long time. So I kind of wanted to highlight that and kind of get your feedback on how have you guys been trading in this market with the politics. What are you looking forward to earnings? But so far that's what I've learned. Like sometimes when we make green week after green week after green week, and I'm not trying to brag or anything, but sometimes you get into a false sense of confidence where you're just going to keep repeating that. The biggest thing for repetitiveness, like people think just because you had green week after green week after green week, it takes 3 weeks to develop a habit. It takes also 3 weeks to break a habit, right? So if you're green, you think that trend is going to continue. You don't see why it wouldn't continue until it doesn't continue. Then it's kind of like that. Then you have to start reflecting. The one thing that you don't want to do is keep banging your head against the wall and keep trading when you're losing and you're not seeing the market clearly. You keep banging your head against the wall and you take your account to zero. That's something that you don't want to do. It's okay to have losing weeks. It's okay to have losing days, but you don't want to develop a trend where you take your account to zero. In terms of money, it takes us a long time, most people, to earn money, right? It takes us a long time to earn money. It takes us a long time to put money into our account. Every dollar that we earn is kind of sacred. Like it takes, this is real money. I think that through the trading platform, we have a false sense of money kind of because, when we go out to the store and let's say we're paying in cash, we're physically giving that cash. But when I make a $500 trade, $1,000 trade, it doesn't really feel like I'm spending $500 at the time. It just feels like I'm, because you think because you put in 500, you might get 600 back, or you might get 700 back, right? So you're thinking that's going to increase. It doesn't feel like you're spending it, but in reality, you're buying something that potentially could go to zero, right? Yeah, Julio. Everyone does make mistakes. I'm doing much better ignoring the news and just play the trend. Yeah, so for me moving forward, like I took Monday off. It was actually probably a good day. I took yesterday off because there was nothing really happening. Today, some volume kicked in today, and we saw some things happen like Roku, Apple. I'm sorry, not Apple, Microsoft, Google, Amazon. Some things were making some moves. Spy made some moves as well today. But it was pretty chill afternoon. That's kind of what you want. What we expect from the market is, when markets are bullish and VIX is low, we expect like 1 to 2 moves per day, and then it's just kind of flat the rest of the day. And that's kind of where, when VIX was low, I used to do a lot of strangles and I would hold overnight because most of the money was made up on gap ups or gap downs, and then was flat the rest of the day. So, looking at yourself, looking at the market, looking at your trades, you always have to adjust your strategy because your strategy is not going to work forever. Your strategy is eventually going to stop working. So when you start losing, you have to evaluate what you're doing, what the strategy is, and you might have to go back into the closet, pull out some other strategies that you had tucked away in there for a rainy day, because there's always, in terms of options in the market, thankfully in options, we have a vast amount of strategies that we can use with different market circumstances, but not the same strategy is going to work all the time. So that's why you have to, excuse me, that's why you have to adjust. You have to take a look at your strategy constantly and make sure you're using the best strategy for what the market is in right now. I've been banking on the morning money moves, but I'm looking for strats and ways to make money in the afternoon. Yeah, I mean, unless you're selling premium, it's going to be very tough to make money. Like if SPY is bouncing, if SPY is bouncing 50 cents or any stock is bouncing 50 cents, you're going to have a hard time making money, unless you're selling premium. So you could potentially buy premium in the morning, make some money, sell premium in the afternoon. It really depends on what you feel you can do for that day. I had SPY puts last week, also was a very bad week. Yeah, I mean, I think one of the reasons why I stopped trading earnings reports before earnings comes out is because that is gambling. You don't know which direction is going to go. I mean, they could beat earnings but lower guidance. They could miss earnings but raise guidance. They could have some sort of scandal they release in their earnings call that you didn't know about, and it tanks or whatever the case is. And buying strangles and sometimes selling premium. Even selling premium is a bit dangerous because you could put a nice iron condor on and something crazy happens and it goes way beyond the expected move, and then the premium sellers end up in the premium buyer. So like for me guessing what the trade deal was going to be was gambling, kind of like what earnings is. I do like to trade earnings, but after the fact earnings comes out. So right now I don't trade earnings beforehand. I always trade earnings after they're released. So in terms of my strategy right now, I'm looking to slow things down, also be accountable to you guys, because you guys are looking like, hey, why is Nick putting on a super risky trade right now? And that's not what you want to do. That's not what I want to do. That's not what anyone should want to do long term. Long term, we should be looking to build our accounts, not bring them down to zero, not lose money. And it's okay. It's okay to lose money, but just you don't want to repeatedly lose money, because once you repeatedly lose money, you're eventually going to get in trouble depending on how big your losses are. Some people, a big loss for them is $500. Some people, a big loss for them is 50 grand. It all depends on what your account size is, but at the end of the day, it's all relative. Whether you have $1 million account, $100,000 account, whatever the account size is, it's all relative, because the strategies that you use are going to lead to losers, or they're going to lead to winners. So that's about all that I had to say about that. If there's any stocks that you guys want to look at, let me know. If you guys find this video of value so far, hit the like button. I'd really appreciate it. If there's any stocks you guys want to look at real quick, coming up on the earnings here, the banks were running, even though Goldman Sachs missed earnings, they did run up to 208. Yeah, Goldman Sachs ran up to 208. Johnson & Johnson was a big one today, and JP Morgan as well. So if we look at JP Morgan is up 3%, and Goldman Sachs, even though they missed, this would probably have been a good one to buy calls on Goldman Sachs today. Let's see if there was a good premium crush on Goldman Sachs. So the 200s. So if we got, let's just say the 205. See how those babies did today. So like for me, I wasn't looking to get actively into the market today. I was basically trying to observe. And when you're reevaluating your strategy, you don't want to just go back in. You want to make one trade, two trades, come out green, and then re-enter. You don't want to put on, like, after you come off a losing day, you don't go in all crazy and say, I want to make this back, or I want to do this, I want to do that. You just kind of have to be calm, collective, and make some trade. Yeah, this was, so as you can see here, the 205s, 44 cents to $4 today on these Goldman Sachs trade. Yeah, Jonathan, I'll look at Facebook. This would have been a nice trade. Now that earnings season is in place, we're gonna have a lot of opportunities. There's gonna be a lot of opportunities like this. If you're like, don't feel bad that you missed a trade, because these trades are gonna happen every day now that we're in earnings season. So don't feel bad. Goldman Sachs, I think is good till 210. Then we might have some trouble. Facebook, Jonathan. So Facebook is kind of coming up on here at the 190 level. It's been topping out the last few months. Since August, since it's dropped from 208, it hasn't been able to really get above like the 190, 192 level. It did for a little bit up here on September 20th, and then that that was the end of that. And now we're back up to here. What did it reach today? Yeah, it hit 190 before it faded, which volatility really went down. Facebook's gotten a little bit of trouble because over the weekend, I don't know if you guys saw, they did have some news about how they favor certain things in terms of ads. The whole Trump and Warren ad thing, and that has a bad press over the weekend. But apparently that didn't do anything. I don't exactly know why Facebook ripped up, but on a technical level, obviously, it's been kind of ramping up all week, and then today it skyrocketed, and it didn't break out though, so it's still kind of bearish in terms of a formation here. We're still. Hey, what's going on? Daddy. Yeah, I'm streaming on the thing. Say hi. Hi. All right, I'm gonna finish up this live stream and okay, I'll see you in a few. Okay. Close the door. Thanks. Sorry. So, from a technical level, I'm looking at the 190 area. I think this is very important in terms of where it's going. Obviously hit the 190 level and then started to fade. I guess that's why we locked the door. Yo, Matt made $1,500 on Roku today. Life is good. Yeah, I was honestly too in terms of, we can look at AMC, Matt. I was, in terms of my first day back after a losing day on Friday, I was too scared to trade Roku. And I do see, the one thing that I don't understand on Roku is, why is Apple TV and Apple TV Plus going on Roku, which fundamentally like it changes things in terms of Apple's product and distribution and all that. Your son is a perfect reason for why we do what we do in the market. Yeah, I mean, if it in terms of kids and trading, I mean, it definitely changes your perspective, like long term and investing. It changes your perspective a lot in terms of what you do, why you do it, and who you do it for. When you're single and you're just doing it for yourself, you can take the brunt. But when you have little ones and other people counting on you, it changes your perspective in terms of trading. But AMC, yeah, I mean, AMC's a little trouble here. They have earnings coming up, right? November 7th. So AMC, I mean, they're back down here at 52-week lows. They could bounce. Earnings aren't for another month, 3 weeks. So, if I would just be mindful of this. I mean, I definitely think that you could buy the dip, but you also want to be very careful. Okay. All right. Oh yeah, they announced a streaming service. How do I get started on my watch list? Charles, what do you mean? How do you get started by your watch list? Are you asking? We're doing the live stream for the Minion today. Yeah, Matt, but Roku. So Roku. They said that they're gonna have the Apple TV Plus and Apple TV app, and that's a big win for Roku. I don't know. Like I said, I don't know why Apple would do it, but in terms of Roku, it adds a lot of value because you could buy literally. I mean, how much is a? So if I go to, let's just look here. I don't have a Roku. I've never had a Roku. I have an Apple TV, but you could literally buy, a Roku for $100, $38. And then we can get a, let's just do the, we'll see how much these are. You know, the Apple TV HD is $149. This, the 4K is $179 or $199. Or you could buy one of these for $99 or $39. So I think it adds a lot of value, especially if you have if you have stuff in your library. Like for me, I have a lot of content over the years that I've amassed on my Apple ID. So I don't know why Apple will do this, kind of cannibalize their Apple TV, unless they just really don't take it seriously. Where Apple is saying, all right, we're going to take a hit on the Apple TV, but the streaming platform can reach the masses. Because when you have an Apple TV, if it's only on Apple TV, it's going to cap how far their streaming service can go. But if they start pushing that on other platforms now, if they have an Apple TV for Xbox, PS4, start integrating it in smart TVs, you know, then kind of like what Netflix has, if they're able to push that out on all platforms, not just their own, you know, it's kind of like why did Windows become more popular than Mac OS, or what was it called back then? I don't know, OS X, right? Or OS. Anyways, so Mac OS, because Windows was available on any platform, any hardware, but Mac was only available on their own hardware, and that's why it didn't reach the success that it could have reached. You know, if it was available, like can you imagine if Dell and Lenovo and the people were able to issue hardware that would run Mac? So it's kind of interesting from a perspective of their content and kind of like their moat, you per se, is I think this could change everything for Apple, because now they're pushing it out on Roku. They're gonna try to probably break the barriers on other things. Are they gonna launch apps for Android? You know, are they going to be launching an app through Microsoft? You know, it's very interesting that they did this. I mean, I would have never thought in a million years that Apple would allow their software to be run on Roku. I mean, it just doesn't make sense. But it makes sense. I mean, it doesn't make sense if you're thinking like Apple, but it makes sense to the rest of us, because we're like, hey, why wouldn't you want your streaming service on all platforms? But so it sounds like they really want to compete in the streaming, and they're allowing the sales of the Apple TV to go down, which I honestly don't think. I mean, how much money do they make from the Apple TV? Let's see here. I know they changed their they changed how they report different things. Man, that scroll is so slow. Whoa. So I don't know if you can see this. So Apple Watch, TV, and accessories is 10%. So they're making less than 10%. They're making less than 10% from the Apple TVs. They make most of their money on iPhone and then services. They're making less than 10% on the Apple TV itself. So, you know, maybe they said, hey, we'll take the hit here so that the streaming service can go higher. You know, Disney Plus is going to take over streaming. I agree. His name Charles. Are you still here? If you want to make a watch list, you basically a watch list is making a list of stocks that you want to watch that day. So there's a million stocks to trade in the market, right? But to be successful, you have to narrow it down to 4 or 5 that you want to watch a day, and then pick the best setups that you want to trade that day. You know, just because there's a million things happening in the market doesn't mean that you're going to be able to trade them. So you really want to focus on key things and key stocks for that day. You don't if your attention goes too far to too many stocks, you're not going to be successful, because it's going to be hard to watch that many stocks. Could you look at Disney? I was going to buy 100 stocks before earnings. What do you think? Yes, Oliver. Yeah, Nvidia, Oliver. Let me get to Oliver first, and then we'll look at Disney. Oliver, Nvidia is an interesting one. So I was telling someone in the Discord earlier today that I would be like on this breakout right here. So we finally broke out above this like 189 level. Nvidia just went nuts today, and what's stopping me from buying stocks that have been hit hard by the trade war? So Nvidia, Alibaba, any of the Chinese stocks. And if you don't know, most people don't know this, but Nvidia does get a lot of revenue from China. Where is the so where is this right here? Okay. So whoa. Okay. So AMD, Nvidia, Intel, Micron, Qualcomm. So these stocks, they get quite a bit of revenue from China. So they get, Nvidia gets 23% revenues from China. Micron gets 57%. So the reason why I'm not buying these stocks like Nvidia is because the deal hasn't been signed yet. I don't understand, like, there was a phase one deal, but China hasn't signed it yet. So we could potentially see these going to go down, because nothing's been signed right now. So that's the reason. So this breakout is very bullish in terms of a stock, but knowing they get 23% of the revenues from China, I would say it's still dangerous. I mean, this is a nice breakout right here, but this could easily get smacked down. This could easily, they could easily say no deal. China could say no deal, and we can come back down to 180 or 160 again. So that's why normally yes, you would trade this chart in terms of bullish, but on the breakout, but would have worked today. But in terms of holding long term, like as soon as it broke 190, we should have put a position on and held today. But I didn't trade it. Like I said, I wasn't trading any of the crazy stocks. Disney. You think BBY going to have a comeback with the new CEO? There literally isn't even a phase one deal. Trump says there is. So long term for Disney. So, I've said this quite a few times that Disney Now, I'm long-term bullish on Disney. So if you look over the last 5 years, Disney hasn't had any stock growth. They kept getting capped out at like 120. Like between 100 and 120, they kept getting capped out. Disney hasn't had stock growth in 5 years. And then we finally had a breakout. Now, their service is looking pretty promising. Press is coming out. A lot of people are supporting it. Now, what it comes down to is how many subscribers they get off this, and if they're starting to pull some from Netflix and all that. Now, for me, in terms of my household, I don't think that I'm going to be canceling any services. This is my opinion, of course. I don't think I'm going to be canceling any services like Netflix or anything like that to add, because I mean, Disney's literally $6 a month. For me, but some people that maybe can't afford it, they might cancel Netflix to get Disney. But then there's a lot of people that like share passwords too, so I don't really know how that's going to work out. But at the end of the day, what's going to matter is how many subscribers Disney adds, and if they're able to make some money off of it, and it adds to the bottom line in terms of growth, because Disney's adding technology in terms of their entertainment company. They're becoming more than an entertainment company. They're becoming like Netflix, a tech company where they're starting to evolve, and that's why it's starting to break out. So, now that we have this breakout, this is actually probably for me, pretty good buy area. I guess the only concern that every trader has when looking at this chart is, when is this gap going to get filled? So the question is not if, it's when. In terms of trading, after all these years, you have to think about, it's not if the gap is going to get filled, it's when the gap is going to get filled, right? Even with all the data that came out over the last, all the headlines and stuff, I mean, it's still held up pretty strong. Disney Plus is launching on. Okay, so we have 27 days till Disney Plus launch. $70 a year, $7 a month. I mean, to get the full not the full catalog, but whatever catalog they're going to release in terms of Disney and future Disney shows and movies, I mean, I think is pretty good for $6, $7 a month to entertain your family. I mean, it's a no-brainer for more people. But I always get I'm glad that the stock is kind of on the down right now versus just keep skyrocketing, because then it creates a lot of FOMO, and then it could, after a release happens, then the stock could drop a lot. But in terms of the stock right now, it looks fairly healthy before the release. This could definitely run. In terms of buying, I'd probably be, this chart looks like to be a better buy right here versus up in here. But now that we have this data, at the time it looked like, oh, I'm missing the boat, and then it fell, and then it took a while for it to get back up, and then it fell again. And now here we are. Now people are wondering if this gap is going to get filled or not. When is Disney's earnings? Disney's earnings November 7th. So their earnings November 7th. So they're going to build a lot of hype. They're going to build a lot of hype into that earnings call. So like I said, it's kind of 50-50 right now. It could go either way. But in terms of the reason why I say it could go all the way, because they could launch a failed product. I'm not saying it's going to fail, but you could launch a failed product in terms of no one buys it, or didn't hit expectations, and they didn't get the 1 million subscribers or the 2 million subscribers that they thought they were gonna get. They only got 500,000. Anything could happen with a product launch. So they could spend billions of dollars in marketing and think people are gonna buy it, and then they don't. So that's the flip side. I mean, it appears a lot of people are going to buy it. But the flip side is they also couldn't. They might not. So it's an unproven product at this point. So it's kind of like you're going to invest in the future. So if you think about it, if Disney Plus fails, would you still be an investor? Would you still be a long-term investor in Disney? Yes or no? That's the question. I think they'll be fine, though. I think they'll be fine. Matt, BBBY. Yeah, starting to come down finally. I did play some puts last week. I made some money. When it came down below 12. I did make some money. What was this, Thursday, when it skyrocketed and came down. I do think that's probably going to come down to the lower 11s maybe, and see if this can bounce off of here. If not, it could definitely come back to 10. I don't like when the stocks move 20-30% on a new CEO, because that never lasts. They need actual raw data. I know the CEO, where did he come from, like Target or something? He came from Target or whatever, but he could fail. This business could be like, this is just like, there's nobody on earth can save this business. So you gotta be careful about trading a stock like this, especially like retail. I mean, sure, they could have a comeback like Target. I don't know why I'm saying Target. Target is like one of the retail success stories. All the retail is going out of business. Retail, Target, Walmart, they're doing fine, but Target's doing way better. They're up almost 100% in the last year from the lows, 52-week lows, 60 to 112, so almost 100%. But they're investing. The thing about Target is they're investing a lot in themselves. They're remodeling all their stores. BBBY, they have a lot, just because they got the new CEO. It could take him 2 to 3 years to turn this thing around. It could take him 2 to 3 years. or they could just run out of cash and close their doors. Right now, just because if you just started a job, it's going to take you some time to turn things around. You can't just turn things around like tomorrow. Like the stock went up 30%, and the guy didn't even do a thing, right? So you got kind of a lot. It is bullish that that the board. It's bullish in the sense that the board is taking ownership and trying to change the course of where their company is going. But at the same time, you got to be careful that there's no data to really back up this jump. There's no reason for the company to go higher unless he starts proving himself. EXAS. Exact Sciences. I don't think I've ever traded this. But yeah, the volume doesn't look bad. Volume doesn't look bad on some of these strikes here. Yeah, that bounce at 90 here. Pretty nice a couple days ago. I'll have to look into them. Oliver. All right. Any other stocks you guys want to look at before I jump off? I will be doing a watch list video tonight. That'll be posting. But it was definitely good hanging out with you guys today. People trolling me. If you guys haven't joined the Discord, hit it up. I did add an earnings bot in here, so I'm trying to add some more things of value into the Discord so that we don't have to manually get all this information. We can find it in the Discord. So I already have a CNBC top news bot I've been playing with. I'm looking for other things like that. Also, if you want to support the UVH, what we do here, link is below as our Patreon too. You become a little green, a little golden icon up in here. Shows if when you're online in terms of Discord, and we're going to be adding some things there as well. John, yeah, I went over it earlier on the stream about the sign off. SES. So SES is a SES is a penny stock, so I don't really trade SES. Everybody knows what happens with penny stocks. I mainly trade options on well-known stocks because penny stocks, we know what happens with penny stocks. Pump and dump, it goes from $2 to 26 and back down. However, you can lose a lot of money because the reason why I don't like trading options is because why I don't like trading penny stocks is because it's not as frequent. You can make 50%, 100%, 300% every day in options, but there's a lot of research and everything that goes into trading penny stocks, and you're not necessarily, it's not a winning scenario for me. Options trading on well-known stocks, it's a lot easier to get the data. It's a lot easier to find trades. And it's a lot easier to be consistent options trading on well-known stocks than it is to find penny stocks. But yeah, if you want to, the only thing about shorting penny stocks is also it's also risky too, because I've seen penny stocks go from like $1 to $1,000 and shorts get massive margin called. So that's the only thing. I would rather trade options. So anyways, guys, I'll be posting my watch list video later tonight. As always, stay safe, stay green. It's us for Sir.